Hey, welcome to February. Welcome to Patterns and Profits. Happy Groundhog Day to everybody. I'm your host, Punxsutawney Tom. No, I'm actually from Pittsburgh. Anyway, hey, glad to have you here, folks. If you're joining us for the very first time, welcome. I want to focus on today a couple of things. We're going to kind of do a rewind on January, talk about the January effect. I want to talk about the commodities crash that happened with gold and silver, and then Bitcoin over the weekend. It was a bloodbath. And so going to do that. It's also Money Calendar Monday, so we're going to spotlight something on our calendar that we're looking at for opportunities and much more. So feel free to comment throughout the program. I'm going to be checking in and out with your questions live. So let's go ahead and let's get started. I'm actually going to pump up here and get us in the right frame of mind. And let's go ahead and start. Let's start with January, shall we? Okay, so as January goes, so goes the year. This is a belief system, by the way, which is known as the January Barometer. So historically, performance for the S&P 500 in January has been a great pattern for the full year's calendar direction. Should January end with a positive return, it generally indicates a positive year for stocks is going to happen. Now, there's two things that I need you to be aware of. First, since 1950, when January has ended in the green, that means when we have a higher close at the end of January than we did at the beginning of January, the market has followed suit for the full year about 86% of the time. Now, also, since 1950, when the S&P 500 finishes positive in January, over the year, it realizes a net gain of over 16%. On the other side, a negative January typically leads to a negative annual loss of about 1.7%. Therefore, if January 2026 is positive, and it has been, then it paves the way for a stronger year and a stronger market. So how do we end up for January? Let's take a look at the calendar here. It is on the screen for you. This is the beginning, first trading day of January. You can see here all the way to the end of the day. We didn't move that much, all right? Roughly 10 plus points on the S&P 500, regardless of all this volatility you see on the screen. From the highs that occurred both in the second week and the final week of January, and the fall-offs that occurred in the days ensuing those highs, we still ended up with a gain of just a little less than 1.5%. All right. So as we move through, what can we expect? Not only for the month of January, but when we look inside these patterns. So again, my whole theme here has been patterns within patterns. This is a 1-year pattern. This also tells us that the month of January was not straight up. We did have a couple of movements to the downside. And what's interesting is it's the after hours, all right? It's even the weekends when you can spot things that are trading on the weekends like Bitcoin that really show you where the volatility is. Night times, weekends, outside of our normal sessions. So we'll start a normal session with the markets down huge. They were down today like this, and they have recovered since then and moved forward. But are we going to expect to see that same volatility? So even though January ekes out a small profit, the volatility followed a small gain as well. Let's take a look at the money calendar, what it has to say. Now, what I look at with the money calendar is I don't look at an entire year. What I look at is I look at patterns within patterns. I look at the monthly. I look at a quarterly view. I go from quarterly to monthly to what you see on the screen right now, which is the first week of February. You know what I've noticed about the first week of February? Couple things. Number one, the number of bulls to bears when I look at ETFs has dropped. All right. It's dropped considerably since the beginning of January. We're coming into the week with 60-40. All right. So of the top ETFs that are traded, 60% are flashing bulls, 40% are flashing bears. That number goes up a little bit as we get toward the end of the first week, but that is for a short term. We've got AMD, we've got Amazon, we've got Google reporting this week. That might lead to some of the more pop-ups that we see towards the end of the week when it comes to individual stocks. So when I dig into the info below and I open this up, and I want to take a look at a play on one of these ETFs, because you know what? We had 3 of them that popped up on the screen. And all 3 of them, none of them were in SPY, DIA, QQQ. Those were not there. The regular ETFs that you and I look at all the time were not there. All right. There were more safe haven ETFs. This is one of them, XLU. XLU is the utilities ETF. It's often a safe haven when markets are uncertain going forward. XLU is one of the easiest ways to get into a basket of utility stocks under one roof, and they do trade options. So when I'm spotting opportunities, I look for, again, what does the seasonal tell me? The seasonal tells me for XLU right off the bat is that we have a roughly 60-day move in XLU. That's 60 trading days. That's really closer to 90 days on the calendar when you add in the holidays, you add in the weekends, etc. Not much of a big return, but that's typically the case for something like XLU. It's a conservative-based ETF. Therefore, you're going to see conservative numbers coming out of it when you're looking for ROIs. 90% accuracy over the last 10 years. Getting into XLU between now and the end of April. Last time we saw a loser in this was in 2020. And then there's really not much there when we look at trend. There's not much looking at trend, but let's look at the details. And the details show this. Going bullish on XLU between now and April 28th. Again, when I look at the screen, every single year, with the exception of 2020, we saw moves that were positive. Now, there was a very small move in 2023. If you take a look here, you can see it was less than 0.5%. But in every other area, we met or exceeded that average return, which was around 2.79. The loser, there it is, 2020, big loser, 14.78%. But you know what? We had some big losers in 2020 as the entire market collapsed between, say, now and about the beginning of April, end of March, beginning of April. And that's what ended up happening with XLU and a lot of good stocks as well. But take a look at the other 9 years. What does that tell you? It shows you 9 years of patterns. The last 5 years have been profitable. Again, the only issue I have is the 2020 drawdown. Now, when I look at XLU on a chart, it looks like this. Now, I've taken this back to about Labor Day of last year, and that's where we saw the lows on the screen at the time. We saw a move from the lows to the highs. That took us from the low 40s to the high 40s. Since then, since about mid-October, we've been sliding back with what I like to call lower highs and lower lows. The bottom came in, guess when? About a month ago. And since then, we've started to create a little bit of a higher low, higher high scenario. Is this just a short-term move to entice bulls to come in, a bear trap as they call, or is it something more? Well, the seasonalities tell us that we are entering bullish times for XLU. And so when I look at this and if I want to add technicals to it, I might say, all right, well, if we get a close above 44 and we're in the seasonality that we're in right now, then we might start to see higher highs back to the mid to high 40s. If we drop down to a close below 42, then it tells us that the bears are still in control of this particular one. So I'm looking at this saying, seasonals look good. If the bullish technicals look good, then maybe I need to think about jumping into this. What can I do? I can buy XLU. Maybe I buy it at 44 and hold on to it for a couple points gain over the next couple of months. Or what I could do is I could look at options. Now, here's a problem with the options right now. When I look at the options on XLU, what I find is I find January's, February's, March's, and then we jump to June. So there are no April options. So what I could do is jump into the March options and then rotate into June if things look good, right? I could jump from March to April. I could buy the Junes, but I'm going to be getting out of them early as well. Right now, the March 44 calls are mid-priced at 78 cents. That's actually not bad. That's fairly cheap when you look at this particular ETF on average. And if you believe that we could get a move to, say, 46, if you're buying a 44 call and you're paying, let's say you pay $1 for it and it goes to 46, now it's worth $2. That's a 100% gain on your money. But you have to go back and you have to ask yourself, well, do I believe that XLU is going to see a move that's going to be greater than the options are going to be suggesting as we go into February, or March, as we go into April? So the next few days are going to be pretty interesting to see whether or not this does start to make a move higher and therefore leapfrog us into a potential bullish opportunity. So in conclusion, so goes the year, so goes January is off to a good start despite all the recent volatility we've seen. Remember, this is a one-year pattern. Anything can happen between now and December 31st. All right. And then, of course, the calendar does suggest continued volatility in February. And it's suggesting, once again, that what? That utilities, among other things, seem to have a safety factor when they are attached to the uncertainty that we're definitely seeing here for Q1. Last week, I was suggesting that gold was going to have gold and silver were both overdone, and I was suggesting that at the very least we were looking at things like, oh yeah, maybe the long term we were going to move higher, but I also had mentioned that silver. All right, the silver, I didn't really want to touch that with a 10-foot pole. Fast forward from last week to this week, and here's the major question. Are you ready? What happened to gold and silver? What happened? Do I need to repeat myself again? Well, I guess I need to. So going through these charts, all right, going through the charts again, and I've updated last week's charts to today. So first of all, you see gold prices. Remember last week I was talking about the quarter, and I was talking about these STD ranges, all right? And I showed the first range at 420 to 495, and I showed the second range at 380 to 530. Well, it's interesting how we already blew through the first range, the first bottom end range inside of a week. In fact, forget inside of a week. This all happened just last Thursday and Friday. And of course, last night, Sunday night, when the gold markets opened again, we saw another drop, another double-digit drop last night before starting to see some recovery. But gold, GLD itself, hit 405 last night. All right. I mean, if you really kind of set the perspective for where this has been, it literally has seen quite a bit of a movement here just in the last few days. My standard deviation 2, which is typically holds 95% of the time. Remember, the standard deviation 1 is about 68% hold. Standard deviation 2 is a 95% standard deviation hold. So, when I look at 400 is a great round number that gold could pull back to, and it came back very close to that last night at 405. But silver, look at this. I had STD1 range at 70 to 115, and the STD2 range was at 50 to 135. Well, silver, SLV hit 66 last night before rebounding earlier today. 66. That is absolutely insane, considering that on Thursday we were where? 106? All right. 106 to 66. That's 40 points. That is absolutely insane. When you add all of it up, gold and silver look like this. Gold's weekly drop, and this is really, and I'm not counting just the Thursday to this morning drop, but we're talking about a 17% drop in gold in the last week. We saw a 37% drop in silver and SLV in the last week, and I'm talking about the ETFs. So the actual commodities themselves are going to have a very, very close resemblance to GLD and SLV, but these are huge, huge drops. Now, the thing that's interesting about these, if you don't notice already, is that, the fundamentals for gold and silver really haven't changed that much. When you take a look at gold and silver, all right, what's happening, especially in silver, we have a tight supply. All right. If you take a look at gold and silver, more silver than gold, you're going to find that you cannot buy the physical asset in Costco like you used to. There are countries that are banning the sale right now, the sales of gold and silver to the retail public. And so the constraints are still there. But what has happened was all that fear induced in the physical became greed in the paper products, in futures, in the futures contracts, in the ETFs, all right? Also in the tokenized stuff. If you look at digital gold and digital silver, tokenized stuff went crazy. And you had this fever pitch last week, fever pitch greed, which became panic toward the weekend and into today. And so you take a look at that and you got to say, is that panic? Has that panic finally taken out all the leverage? Well, I'm going to talk about that in just a moment. But before I do, let's talk about something else that happened. Bitcoin. This is a one-year chart of Bitcoin, and Bitcoin is down now over 20% for the past year, right? We started out the year about $15,000 higher than we are right now. And so you have to think, well, when did crypto winter actually start? If you look at a year-on-year basis, you might say, well, it started a year ago, but it didn't start a year ago because we had all-time highs that happened on October 6th, October 7th. But there were many people that if you truly had a mix in your digital account, your highs probably came in August. So did crypto winter start in August or did crypto winter start in October? That's probably something that I'll leave for everybody else to make sense of. If you've got a comment on when you believe crypto winter started, or if you believe gold and silver have either started making lower highs and lower lows, or that was a washout to longer term highs, feel free to leave it in the comment section. I'm looking at all those comments and I'll be adding my own comments in as well. But this is a one-year chart of Bitcoin. Look at this. Now we drop to the 1 month chart. The 1 month chart shows that we're only down 11%, right? We're only down 11.59% for the month. Interestingly enough, and as I'm snapshotting these things, Bitcoin is moving like crazy. But take a look at what's gone on just today, up over 4% today. Now you have to understand, up 4% today, we were down, I believe, 6% yesterday. So it has been an absolute cascading of gold, silver, Bitcoin. Now, what's happened in the past is these two commodities and digital commodities have delevered from themselves eventually. They eventually delevered themselves in history. Will that happen again? And will Bitcoin finally look for that move higher? We will see. But after a week of trillions in losses in cryptos and commodities, could this be the turn for cryptos and BTC? All right. So my predictions really haven't changed. And while I think gold will outperform silver in 2026, again, I'm not a squiggly line guy, like I said last week. I also stated that Bitcoin and crypto were in a crypto winter, but that may not last as long as the crowd thinks as well. Okay. And although it's not guaranteed, these leverage liquidations, as we like to call them, well, I believe they cleared the board for those longer term highs And I believe that we're just getting into these longer term highs and what they may end up telling us as we move into February and also into the rest of this year. Let me pop to the Q&A board here, guys. Glad to see you all hanging out in here. Let's check and see what's going on. Did my sound cut out at 12:05? I don't know. I'm hoping not. Welcome to all of you guys that are hanging out here with me. I appreciate you spending time with me. Great comment here that I want to share with everybody on using moving averages, the 55 weekly on Bitcoin. All right, down since November, and keep in mind, and like I said, I'm not a big squiggly line guy, but that does when you take a look at EMAs, you look at moving averages, you got to realize that they are lagging, but that's also not a bad confirmation off the top that we saw happening in October. All right. When do I see Bitcoin going back up, or do I see Bitcoin going back up? Yeah, actually I do. I really think that, Bitcoin, first of all, we all know Bitcoin is, and I say this, I say this before realizing what gold and silver did. I mean, keep in mind, silver made a 30% move on Friday to the downside in one day. I've never seen silver do that. I mean, like I said, you have to go back to like the Hunt brothers in the 80s to see the kind of moves that were happening in silver. For those of you that have not followed gold and silver that long, that's how far you got to go back to see something that we saw. But with Bitcoin, so I want you to think about, a couple of things with Bitcoin. I'm checking all kinds of little things going on here in the markets as we speak. But think about this: you've got a commodity right now that's waiting for the Clarity Act. Okay, I believe what's happening right now is our government stalling that Clarity Act. You take a look at that. You take a look at what the Fed said last week, and that hit gold, silver, and Bitcoin and cryptos as a whole. But here's some points I want to point out. Longer term points. What does Trump want to do with the U.S. dollar? Whether he says it or not, he wants to lower the U.S. dollar. And the reason why is the last thing Trump wants to do is go into the midterms with the markets down. That's going to hurt him. All right, job market's already soft. We know that. And usually a soft job market creates a higher stock market, but that's not the case right now because the Fed is fighting him on this one. But when you look at the long term, the executive branch wants lower dollar. We have a pro-Bitcoin SEC. We have a pro-Bitcoin Fed chair that's coming in. We have pro-Bitcoin senators. We haven't had this before. You've got interest rates that, if continuation happens, we'll get a couple more Fed cuts this year. And so that'll be lower interest rates once again. Interest rates, believe it or not, they haven't been this low. We've cut them back a size. I don't think they've been this low since 2022. You've got crypto now, even 2 years ago wasn't available to most people. Now it is. Now gold and silver finished the highest runs they've had in a while. If they've indeed calmed down, we should see rotation, which we've seen in the past. We've seen rotation from one to the other. Here's a crazy thought, Tony. Here's a crazy thought. It wouldn't be too crazy if we see Bitcoin go back above 100,000 by the end of this quarter. And I think it would be a shock if we saw new all-time highs, but it's possible that we see new all-time highs by the time we get done with Q2. There's a shocker right there for you. All right. So, next question could be, why is SLV in the red, but silver futures going up? Okay. So here's an idea. if you look at what happened on Friday, silver futures dropped so much on Friday. It's again day to day. Silver futures could have been overdone on Friday, which is why we also saw silver dropping in the overnight market and silver futures actually being up on Monday. They could have, typically these run 98, 99% correlation. But there is the occasion that may not happen. Okay, there's the occasion that might not happen. And usually, when you have overnight markets, especially over the weekend, markets are closed. SLV will trade after hours, right? We know the futures trade 24/5, but the futures markets do open on Sunday night. And what you could be looking at the day session for SLV. And of course, the futures, which began overnight and had that run down, but ran back up again. So that's one reason why SLV could be in the red today, but then silver futures up. But it's not going to be by much. All right. So as I get to the end of our program this week, I thought I'd share something with you that we don't discuss a whole lot. I typically don't talk about what I do when I'm not a trader, but I thought I would share something with you because it was a funny story. I could go on for quite some time, but I thought what I'd do is talk a little bit about this. I want to go off topic with you guys for a bit. All right. So, things that traders do when they're not trading. We value our weekends. You and I and many people value weekends. The last thing in the world I want to see is a 24/7 trading market, because then I'm not really going to know when to turn it off. But now, many of you may or may not know, I am not a stranger to the RV world, right? Recreational vehicles. In the last 5 years, I've actually gone through 3 of these RVs, arriving today where I am in a Class A motor coach. And although I wish I would have gone straight to the motor coach and not worked my way through them, I think I wouldn't have truly appreciated getting to where I am right now. Now, before I tell you what I did this weekend, let me get to how I got into the idea of, having a motorhome to go to different events and go to different areas to. Shortly after COVID in 2020, we weren't ready to get started jumping back on airplanes, flying around. I'm sure all of you know why. I have family in New York, and we do a lot of summers in New York. So we bought our first recreational vehicle. And I have a photo, and I want to show it to you. Let me pop it on the screen so everybody can see what I'm talking about here. So this was the first recreational vehicle that I had. Now, I want you to keep in mind, this was myself, my wife, my 2 kids, and our pets. And went out and bought a Sprinter van. All right. This was my wife's idea, was to get the Sprinter van. It was a good idea. It really was. Upon first delivery, I thought it was a great choice. It was, I want to say it was probably about 23 feet long, 22, 23 feet long. Had a small kitchen in the front, had a bathroom in the back, shower as well, had a really open feel concept. Got to tell you, what concerned me was the safety factor on this thing, because, this is a Mercedes Sprinter van. It was not cheap by any fashion. It was really decked out nice, but at the end of the day, you know what this was? What it felt like? Driving over bridges with wind. It was like a cargo van that was decked out on the inside. So I was worried about a crash or even a potential rollover that would have been serious for me and the family. So heading into 2022, remember, I'm moving forward, 2020, 2022, and I jumped to my next purchase, and it was this thing. Oh my God. All right. This is what was called an Earth Cruiser. So I wanted some more space. I bought the 4-door Earth Cruiser, not the 2-door that you see here on the screen. And this is a really it feels like a military style vehicle. It had a shower. So when you entered in, the entry became the shower. It was very small. Had a dining room, little, dining room with the cooktop, and it had the refrigerator. It had a little dining area as well. Had a queen size. What was an RV queen? You know what that is? An RV queen is really a full size bed. This was bigger. I want to say it was probably about 25 feet. It was much safer because this thing was off the ground. But I got to say, At highway speeds, this is not something you want to be driving. I mean, it's drivable. The thing is, though, is it had the Mobileye in it, so I would move here or there a little bit, beep 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 beep, put me back in the lane again, and it was totally off the grid. The biggest thing that was the problem with this is even with more space and much better safety factor, because it's military style, it was hard to get from the steering from the cab into the cabin and back. There was a crawl space you had to crawl through. So one area to the other. Now I'm 60 years old. I'm not a spring chicken anymore. That gets harder and harder to do. Plus, we didn't need a vehicle like this because I'm an East Coaster. I don't spend time in the Moab. I don't spend time, in the Rocky Mountains. I don't spend time where I could be doing off-grid, exploration. That's not me. So last year we started looking at Class A motor coaches. My wife and I walked into a Class A motor coach and we're like, wow, this is exactly what we're looking for. We didn't even know what we were looking for until we got into it. And so I'm talking to that. That's what we're driving now. I can tell you, I can't go off-road on this thing. In fact, it's got to be gentle slopes up or down, or I'm going to hit the bottom of this. This is a pavement princess, is what they're called, right? And I mean, I could tow a car behind it. I could tow 20,000 pounds behind it and not blink twice. Put a Starlink package on the roof, got high-speed internet access. Wherever I go, I can work in the front. My wife can relax in the back. We've got room for everything in here. You barely hear what's going on outside. It's everything I need. I can go 1,000 miles between fuel stops. It's luxury on wheels. All right. So getting to my point, where did I go last weekend? So I ended up going to, how many of you know where Ocala, Florida is? All right, Ocala, Florida. Ocala, Florida is where the World Equestrian Center is. I went to the Prevo Plus event because I wanted to learn more about what I can do with this thing. I got to tell you, there's so many switches up front. I still don't know what every one of them do. And I've had this now for over 6 months. So I decided, let me go find out how to use this thing. And so I went to the Prevo show, Prevo owners, Prevo dealers, Prevo manufacturers. And just, I mean, this is one of the best motor coaches out there. I did a lot of research on it. Like I said, I went there to figure out mostly what those switches up front did, maintenance and more. And if I had an issue, now I got to tell you what's happened. I had an issue with one of my awnings. My awning deployed and I couldn't get it back in. And I changed batteries out and I changed all kinds of stuff. And it turned out something's just wrong with the motor. Here's something else that I found out that I forgot about. You know what's funny? My wife and I are walking around this show and we're in the big meetings. And I turned to my wife and I go, you know what this reminds me of? And she says, what? I said, it reminds me of an Option X event. Only I'm not up there. I'm in the crowd. And it reminded me of that for so many reasons. And, one of the reasons were that you just had this camaraderie. You had this camaraderie of people that wanted to do something and wanted to learn about something, and they were there to support each other. I had a guy who knew a lot more about these things than I did come out and help me with the awnings and eventually help me resolve the situation. So not only did I was able to get back and now I've got to take it in and get a motor fixed on this with the dealer, but I walked away from this program. I walked away from this show with a new group of friends and support group, all right, for a vehicle that I'm driving now. I mean, I had no idea I'd be doing this a year ago. So you know what? This is the question that I'm posing to all of you. What in the world has this got to do with trading? Has it got anything to do with trading? Yes, it's got everything to do with trading. You know why? Because if you're new, or whether you're an expert, you understand two things: knowledge, education, and a support system. All right. Knowledge, education, and that third piece, which I think is vital to really turning this from a fad, this thing called trading, from a fad into more than a fad, into a career, into a lifetime career. Education, all right? Knowledge, education, support system. We're here from Patterns and Profits to help you with the knowledge. We're here to help you with the education, but we're also here to help build a community and build a support system with each and every one of you. All right. That's why I shared this story with you today, guys. All right. So, kind of summarizing up, so goes January, so goes the year. I'm going to start looking for more and more bullish opportunities. But the thing that we need to realize is that within that 1 year time frame, I'm looking for pockets of bullishness. I think the big pocket is not this month. I think this is the month we got to be careful on. I think the big pocket comes in March. All right. And we'll get into it more and more. But there you go. Thank you, Mr. Bull. Appreciate the comment. Thank you all for joining me on this week's Patterns and Profits Live. I'll see you again next week. Join you then. Till then, have a great rest of your day. Have a great rest of your week. Happy Groundhog Day to everybody. See you soon.